Welcome back, future millionaires. Today's video is about the 20 tips to know what stocks to buy for 2021 and beyond. Here at Millionaire Mindset, we make videos to help you get into the right mindset to succeed financially. If you are new, do hit that subscribe button. Watch till number 1, you don't want to miss what we saved for last. Okay, let's get into the video. The best way to build wealth is to let your money work for you through your investments. However, it is crucial for would-be investors to educate themselves. You need to learn the benefits of a particular investment, understand the associated risks, and know how to manage your assets for growth. For most people, stock investments are one of the pillars of growing your net worth over the long term. Although it is easy to start investing in stocks with the internet, remember that it takes a ton of learning and experience to make profitable decisions consistently. Here are the 20 tips to know what stocks to buy for 2021. Before we begin, why don't you hit the subscribe button and the bell notification icon so that you never miss any of our videos. Let's begin. Number 20. Do your homework. First and foremost, you must never make your investment decisions by hunches or hearsays. Implement thorough analysis techniques and use data in picking your stocks. Thankfully, there is a vast library of learning resources for DIY investors you can access online. Number 19. Don't be a pig. The unpredictability of the stock market is not your primary enemy, it is your greed. Remember that many investors become pigs and ditch an original investment strategy just because an investment is performing a lot better than expected. Don't be a pig, stick to the plan and know when to move on. Number 18. Don't sell out of panic. As opposed to holding on to stocks for too long, there are those who leave too soon. Take note that corrections and losses happen all the time, but in most cases, there is always a better time to start selling. Number 17. Don't buy from bad companies. It is fine to buy a losing stock, but you should never invest in a bad company. Once a brand is ruined, it may take years before a company finally recovers. Some, however, may never recover. Either way, these companies are simply not worth risking your money. Number 16. Look for quality. If you focus your attention on companies that have wide economic moats, you will find firms that are virtually certain to have higher earnings 5 or 10 years from now. You want to make sure that you focus your attention on companies that increase the intrinsic value of their shares over time. These afford you the luxury of being patient and holding for a long time. Otherwise, you are just playing a game of chicken with the stock market. Number 15. Be a partial buyer. A good rule to have is never to buy all at once, regardless of how promising a stock is. Chances are, there will be plenty of opportunities for you to buy the stock at better prices. As an investor, you need to learn how to identify the best time to buy stocks. Number 14. Diversify. When it comes to investments, it is always better to put your eggs in multiple baskets as a risk control strategy. Remember that, out of all the strategies under the belt of investors, diversification is the only one that is guaranteed to work for you. Just bear in mind that diversification works best across industries and not companies on the same playing field. Number 13. Don't own too many stocks. Although diversification is a pretty solid strategy, you should prevent yourself from overdoing it. As a stock investor, you should try not to overwhelm yourself with too many shares. As a rule of thumb, you should limit yourself to only one company for each industry. Number 12. Keep your cash if you can. Remember that you always have a choice to keep your cash and abstain from picking up stocks. If you cannot find anything new or something worth buying, then, by all means, keep your money. Number 11. Buy low, sell high. If you let stock prices alone guide your buy and sell decisions, you are letting the tail wag the dog. It's frightening how many people will buy stocks just because they've recently risen, and those same people will sell when stocks have recently performed poorly. Wake up call. When stocks have fallen, they are low, and that is generally the time to buy. Similarly, when they have skyrocketed, they are high, and that is generally the time to sell. Don't let fear, when stocks have fallen, or greed, when stocks have risen, take over your decision making. Number 10. Recognize the signs of a top. Whether it's tulip bulbs in 17th century Holland, gold in 1849, or Beanie Babies and internet stocks in the 1990s, anytime a crowd has unanimously agreed that a certain investment is a can't-lose opportunity, you are probably best off to avoid that investment. The tide is likely to soon turn. Also, when you see people making investments that they have no business making, think bellboys giving tips on bonds, auto mechanics day trading stocks in their shops, or successful doctors giving up medicine to flip real estate, that's also a sign to search for the exits. Number 9. Don't trust everything you hear on TV. Here's a cold hard fact: the media will almost always never tell the entire story. That said, you should never make TV the main deciding factor for your investment choices. Dig deep, do your research, and try not to be swayed by whatever you see on television. Number 8. When the going gets tough, pick your favorites. When things get tough, you should never defend all of your stocks, especially if they are within the same sector. Always rank your picks according to which you like the most, stick to them, and drop everything else. Number 7. Bonds are friends. Many investors forget all about the bond market. Though it can be considered as the competition to the stock market, that does not mean you should ignore it as a profitable investment vehicle. Just remember that stocks and bonds are different assets, which is why you should do your best to learn about each of them and how they can contribute to your portfolio. Number 6. Buy the best in the sector. Remember that going for the cheaper company is not always the best route. Expect that the better company is often pricier, so you should see it as a trade-off if you want a more solid investment decision. It is also a good idea to buy blue-chip stocks for safe, long-term keeping. Number 5. Ride the Wall Street promotion machine. The investor's perception is a huge driver for market movement. Although the Wall Street promotion machine can keep the prices up beyond reason, the point is they can. That said, beware the Wall Street hype and do your best not to go against it. Number 4. Always wait after pre-announcements. It is common for companies to pre-announce earnings in bad quarters. Pre-announcements, however, may signal ongoing weakness, so it is best to wait for about 30 days before you buy. Number 3. Don't buy losers at the expense of winners. Some stock investors have the nasty habit of selling the winners so that they could hold on to losers. This kind of backward logic can quickly deflate the value of your portfolio, so it is best to avoid it at all costs. Number 2. Refer to robo-advisors. Robo-advisors are automated wealth management services that work purely on algorithms and data. In a way, they are the best kind of advisors because they focus on numbers and not emotions. However, you should still do your research and look for the best robo-advisors that can supply your needs as an investor. Number 1. Find the bull market. No matter what happens, there will always be a winning market somewhere. It is your job to find the bull among a sea of bears. Be it oil, silver, gold, medicine, or tech, something out there is bound to be winning. Subscribe and turn on notifications so you don't miss more videos of business ideas to make money and much more. Check out this playlist of my top 10 videos of tips by experts, and I'll see you in the next video.